Hello guys, and welcome in a new video where we will talk about the euro dollar. I'll make an update for this common pair that usually sets the trend for other forex pairs. This is the previous vision where we were seeing that there is an impulse wave that could represent wave 1 or A that had been followed with what it looks like one of the shapes of zigzags. Simple shape, an ABC that ended with an ending diagonal pattern, which also can represent wave W of a double zigzag. Of course, there is another vision that suggests the bullish wave can be wave D of a triangle pattern in the higher degree, and the drop is expected through wave E of this triangle. But since this movement is expecting the same thing, and I made a video talking about it before, this one will be a follow-up on this vision. So according to this vision, we said if the price breaks this corrective price channel, we can see further decline through another zigzag that represents wave Y to form a new low, ideally under 1.06970, which is compatible with 61.8 of the last bullish wave. The price broke the channel that we were talking about and made another zigzag as expected. Started with a leading diagonal, a recovery through wave B that retraced deeply of wave A that usually happens when you see leading diagonal, then another drop through an impulse wave that represented wave C of wave Y within the wave 2 or B. Now the price made a reaction through another diagonal pattern representing wave 1 of a possible impulse wave in the higher degree, a reaction through a deep corrective wave that can represent wave 2, which is a normal thing as I mentioned, then another shape of motive waves, which we will look to its details from the lower time frame. So if we analyze what's happening, we can say that there is a corrective wave that had been contained by a price channel, a breakout through a motive wave, reaction, so we can expect another one to the upside. Whether we consider this as a wave D and this is E, or this is 1 or A and this is 2 or B, according to this scenario, we can expect a bullish movement to the upside as long as the price is still above 1.06655. From a classical approach, we can say that we have a positive reversal pattern, which is the head and shoulders, and this can be its neckline. The price broke through the neckline from the upside, which kind of enhances our bullish vision. Anyway, this is the invalidation level. The price gotta stay above this level to maintain this vision and count on it. So now let's see the details of the lower time frame that shows the internal subwaves of that last bullish movement. As you can see, we drew our base channel, which can be used to distinguish between the motive and corrective waves, and obviously the price broke through the channel from the upside, which enhances the possibility that we are in front of an impulse wave instead of a corrective wave. After deleting that base channel, which we no longer need, we let this final channel, which will help us later to anticipate the end of this impulsive wave. So as you see, we have a leading diagonal in its expanded version, followed with a sharp drop as a wave 2, which is typical after a diagonal, especially as a wave 2, an impulse wave that can represent wave 3, a sideways corrective shape which can be a running triangle pattern as a wave 4, alternation between wave 2 and 4, that's what usually happens between wave 2 and 4 of an impulse wave specifically, not diagonals, because with diagonals we don't expect any sort of alternation between wave 2 and 4. 2 and 4 of a diagonal, whether it is leading or ending, it's usually one of the forms of zigzags. But since we're talking about an impulse wave, ideally we see alternation between wave 4 and wave 2. This guideline is pretty important, whether to determine whether or not you are in front of a perfect impulse wave or to expect the shape of wave 4 right after finishing wave 3. So now, since we are inside wave 5, we have to measure its target. And we saw together in the lesson of measurements using Fibonacci ratios how to determine the target of wave 5. So here we used Fibonacci extension tool from the beginning of wave 1 to the end of wave 3, and then the other line over wave 4. We determined the level. We set the level that represents 0.618 which is here. We determined another target by using the Fibonacci extension tool from the beginning of wave 1 to its end, and then the other line over wave 4, and also set the level that represents 100% from the size of wave 1, which is 100% compatible with the first target that was 0.618. So this level is important to watch and see what is the pattern that will unfold as a wave 5 when it gets there. So what are the possibilities right now? The way I see it, we either see an extended fifth wave that takes the price to the upper boundary of this final channel, which can make even a slight throw over, or we observe an ending diagonal that ends from the area that I mentioned. So if we see a slight movement to the upside, then a drop that makes an overlap with the price territory of wave 1, we put a trend line that combines between the end of wave 1 and the possible wave 3, then another one between the possible wave 2 and wave 4. If we end up with a pattern like this, this is going to be a perfect sign of a reverse, and what's going to be left after that is just waiting for a clear break like this with an impulse wave. If there is no clear impulse wave after breaking this lower boundary of this ending diagonal, we will wait until we see a clear impulse wave that breaks our final channel with a key level that confirms decisively the beginning of the corrective phase, which should lead the price to at least the price territory of wave 4 from this impulse wave. But if we don't see any signs of reverse, the price is elected for more bullishness through the subwaves of an extended fifth wave. So that's how I see the euro dollar. Now let's make an update for gold. As you can see, the price made an impulse structure, wave 1 as an impulse wave, a double 3 as a wave 2, a zigzag combined with a regular flat, then an impulse structure as a wave 3, wave 4, 5. So we can say that we finished wave 1 of an impulse wave that should take us ideally to the target that we mentioned in the last week, based on the bigger picture, which is 2,553. According to this count, wave 2 ended as a double zigzag. Then we made wave 1, 2, then 1, 2 structure. Wave 2 of wave 3 got to the area between 50 to 61.8 of wave 1, which is a typical retracement for wave 2. Classically, it visited the support level that has been formed through the peak of wave 1, and then we saw a bounce, which can be the beginning of wave 3. What enhances this vision is the increase in volume. As you can see below, it started weak, then gradually increased till it became like this, and this is an ideal volume within the impulsive structures. When price gets to the wave 3, you see volume like this. So as long as the price didn't break 2,370, this scenario will remain valid. Before we wrap things up, I want to mention the alternative scenario, which is the bearish scenario, at least in the short term, which says that this movement, it can be wave 4 that represents wave 4 of wave 1, and wave 5 can end as an ending diagonal pattern like this. So in case we see something like that, we can expect a deep drop to form wave 2 of an impulse wave in the higher degree. What's going to enhance this scenario is if we see a bullish movement to the upside with a decreasing volume like that. I'm mentioning this scenario because of some reasons, and the main one is that so far we didn't see a decisive breakthrough above the upper boundary of this base channel, which, as I said, we are using it to distinguish, or one of the reasons why we use it is to distinguish between the impulse and corrective structures. And as you can see, the price roughly broke through the upper boundary. And even if there is a breakthrough, there is no clear close of a candlestick or a bar above this upper limit. The other bearish scenario is a drop through wave C of a flat, regardless of the shape of this flat. It can be a running flat or expanded flat. Why we're talking about flat? There are a couple of reasons. The first one, as we said before, the price didn't break through the base channel decisively from the upside. Second thing, the drop through the double zigzag that we said it can represent wave 2, it can be wave A of a flat, and wave 1 and 2, and then 1 of 3. According to the previous scenario, it can be a zigzag, and zigzags we know they can represent wave B of a flat. Besides, this bullish wave got to the level that represents 1.618 of this possible wave A. And we know, according to the measurements of Fibonacci ratios, which we made a lesson about, wave B can end from this level. This is one of the reversal levels for wave B of a flat. Wave C of a flat ends ideally from the level that represents 1.618 from the size of wave A. And when it is extended, it can get to 2.618 of wave A. Anyway, if we see an impulse structure or a bearish movement, we will watch its subwaves. If there is a clear impulse wave that ends from here, from 1.618 of wave A, we will determine a key level to confirm the bullish wave, which will be through wave 3 of an impulse wave in the higher degree. But in case we saw a drop like this through an impulse wave, just 5 waves like that, then a corrective wave, this means most likely we're going to see more drop, more decline through wave 5 of wave C. That takes us to the level I mentioned, which can be compatible with the zone or the price territory of wave 2 from wave 1. Anyway, if we see a drop, the drop shouldn't break this level that we talked about it last week, 2,293, because if the price breaks it, the count will be invalidated. But as I said, this is just an alternative scenario, a bearish scenario that can be added to the bearish scenario in case we see a diagonal, although it is a weak scenario so far, but it is possible. The first scenario is this one, and it's going to be enhanced in case we see increasing volume, for example, something like that, and then increasing volume, of course, with a breaking through 2,424 in the base channel from the upside. But if we see a weak movement like this with a decreasing volume, something like that, this enhances the possibility of the ending diagonal, as we said, the diagonal that can represent wave 5 from this bullish impulse wave. So that's it, guys. That's all I can say about gold and the euro dollar. And if there is anything new, I'll make an update as soon as possible. So good luck, and I'll see you soon.